Well, hi, I had a couple of questions come in this morning and I thought it would be pretty good to make a video about this because it's often a much asked question. And the questions were, one question about two parts were, could Pat software help locate the accumulation area in the market maker's business model? And could it also help locate the start of the profit release? So what I thought I'd do this morning is just call up a chart, just show you what I do, how I have things set up. And so you can get an insight into what I'm looking at in the process. And one of the most important things I think is that a lot of traders will looking at the live edge, because that's the live edge is where you're going to make money. Of course, you can only make money at the live edge. Everything else is hindsight. But it's quite important that if you see something, or when you see something at the live edge and you think, okay, is this likely to be a profit release? Is this where the market's likely to go from? You do need then to go back and see, were the trigger points there to validate what you're currently looking at? Because it may well be that you're seeing something like a jump bar right at the coal face, as it were, the last bar on the chart, and you're thinking, okay, now is the time to go. But what you need to be really doing is looking back at that point and saying, okay, I can see the jump bar, I can see this trigger that is likely to go off into the profit release, but where's the foundation as to say this is genuinely going to go from here? So let's have a look at that now. And I'm going to be looking away a little bit because I was looking at the camera, looking at the screen, but I'll minimize myself down here if I can, get this a bit smaller down there. And I'll just go through some settings that what I've got set up on Pat here, because these are, and again, these are not set in stone. This is entirely up to you how you do this. But if you just go over to your options and you can show the floating zone, which is the floating zone, are these three white lines that you see on the screen. Let me just call that up for you so you can just see. I'll just minimize that a little bit. Okay, so this is the floating zone. These three lines you can see, and they sort of go down and follow the market, as it were, going down. So that's the floating zone that we're talking about. And the settings to adjust those will be found up in options. So you can show the floating zone here, and then you go down to set your floating zone length. And you can see I've got this one set at 12. And I'm going to click OK on there. And you can also go to the options and you click on floating zone height. And I've set that at 22. 22, double that 44, around about the 45, so that's half of the 90 pip range that we work. So that's why I've got the 22 in there. But again, you can experiment with this if you want. It's entirely up to you. These are my settings and I find these to be quite good. Okay, so what are we looking for in terms of when we're looking for accumulation? Do we know this accumulation is happening? Now what you're looking for is you want to see areas where you've got belief bars, and the belief bars in Pat, if you know, are these little bars here, these blue and these yellows like this, and the blue just shows us an increasing activity and the yellow shows us a decreasing activity. Okay, so what we're looking for, we're not looking for particular colors in this area, but we're looking for when we see a tight range of belief bars, and we're looking for them to occur in sort of a lane. Now I term these lanes as sort of got the upper lane here of the floating zone, and you have the lower lane of the floating zone. And what you will probably immediately see from this chart is that often when the market actually moves over, crosses from one side to the other, it'll then stay in that lane for some time. Again, when it crosses over here, stays down in that lane and crosses over and then stays in that lane again. So this is a very good indicator of trend as well, and which way that you want to be trading with the market. So that's a very good side tip there, if you like. Okay, so what we're looking at is coming off, we're saying, okay, have we got this accumulation area? Is it quite in a confined range? It's sitting in one lane of the floating zone. In this case, it's the upper one. And then what we're saying is, okay, well, what's the trigger point? Now, I'm going to say to you that if you'd seen something like this bar here, where the market has been going along like this, and all of a sudden this bar jumps down like this, or we see this here, and then we see another jump down like this bar here, and this would be a good indicator to say, okay, this market is likely now to continue on down. We're already down in the floating zone, underside, and the market's likely to carry on down. I'm just going to put on the 90 pips tool here and just check this out. I just pick that to the top there. Okay, so you can see if we put that on, there's the 90 pip range down to there. And what I'll be saying is, okay, I can now see this. I can see this has occurred up here. Is there anything prior to this that would indicate that this could now be a good selling opportunity? And what I'd be looking for is a stop take. So as the market came up through here and the market started to come off there, traders will have put stops around this area here, this high point here. You then see the market comes back up here, punches out the stop, and you can see this by all these blue bars, these 3 blue bars. This is an increase in activity. A lot of activity is starting at this point, punches out this, and then the market gets in, and then down it goes. So what we're looking at here is the trigger point here, but this trigger point on its own doesn't mean much. It's important you understand that, because if you're just looking at trigger points, then you'll find these jump bars all over the place, and we don't want that. What we want to do is say, okay, well, here's a jump bar down. I can see there's been a dramatic shift, and I explain this in the course, what this is like. I'll do a quick one here for you. It's a little bit like, you imagine a dark room, a set of steps. You're walking up, higher, stepping up higher, and all of a sudden, there's no further step, and you step off and drop down. It's that shock that you would experience, and what we're looking at, a shock that the market would experience. Okay, so that's what a jump bar is, a rough definition of what a jump bar is. So you can see that by having this, and again a recap here, you've got you look back, there was the stop take, there was the accumulation. So you've got the components added up, accumulation, you've got the stop take, and now you have the indicator there to now go short into the market. You can see the market then sits down in the underside of the floating zone. So does it happen again later on? Okay, so look what we have. We have a lot of activity here in a confined space. Okay, the confined space of the floating zone. So, okay, is this going to be a possible up move? Okay, what we want to see is some sort of trigger event. If we look at this, we can see the market was coming down, and all of a sudden, bump, up it goes. Big step up after there. Again, on its own, this will not mean anything. We need to have the foundation. Was the foundation there? Well, yeah, we saw this on here, and possibly we could have had a little bit of stock taking under here, but unlikely on this too much, because the market in sort of a downtrend through here anyway. There would have been some people that started to go long through here and put some stops here, but it's not a major stop take. But we have got this in the lower lane here. The market's crossed across into the upper lane, and then we've got this jump bar up coming through here, and the market gets away again. So do we have the same again? Well, hopefully now you're starting to see this. Look what we've got here in the bottom half of the floating zone lane, the bottom lane. So, okay, we've got this on here, and then we see the jump bar down. Okay, and really when I say the jump bar, it's really just this shift down. But what you're looking at always is seeing what is behind this. Does it validate you taking a trade? Have you got accumulation? Have you got stop take? So you see this, you're at the coal face now, as it were. You're looking at this. This is the last bar on the chart, as it were. You've seen this drop down. Say, okay, I've seen this dramatic drop down move. Anything to support this? You go back up. Okay, we've got this set up in our floating zone here. Was there a stop take? Yep, highly likely. There we go. And you can see, actual fact, just wait till that rises off. Look at this drop down from here. You can see that shock value as it came down off of that. So up, took the stops, shock value down, then goes into accumulation area, and then and manipulation, of course, and it's already in the floating zone, down to the underside, and then we have the down move from here. Does it happen again? Yep, there we go again, and stays within the floating zone. So hopefully that helps you answer your question. Keep it nice and simple. In summary, when you see something at the coal face, at the last bar that you want, okay, this is where a move is likely to go from. Look back. Has there been accumulation? Has there been manipulation? Manipulation in that either in the upper or higher lane of the floating zone? And is there a stop take? If you've got those components together, it's highly likely you are on for a great trade, and you can hold that trade as it sits and runs down through the floating zone, either one side or the other. Hope that helps, and I'll catch up with you very soon. Take care.